Solana has spot ETFs. It has a booming developer ecosystem and the backing of some of the biggest names in finance, from BlackRock to Franklin Templeton. By every conceivable metric, the fundamental case for Solana has never been stronger, and yet its price has been left in the dust, lagging the broader crypto market and leaving millions of holders staring at their screens asking the same question.
So, what gives?
So, is this a massive accumulation opportunity before the next explosive leg up? Or is Solana's momentum quietly dying, leaving it poised for a return to its bear market lows? Well, today we are going to dissect the anatomy of Solana's perplexing price action. We'll break down exactly what's happened over the past few weeks and why the market seems to be ignoring a tidal wave of bullish news. We'll analyze the real reasons for its underperformance, from Memecoin fatigue to formidable new competitors. And finally, we'll look at the powerful catalysts and the dangerous headwinds on the horizon for the next 2 months that could finally decide Solana's fate in 2025. My name is Lewis, and if you hold Sol, this is one video you cannot afford to miss. First things first though, none of this is financial advice. I'm just here to explain the forces shaping the Solana ecosystem. So if that sounds good, then show your support by smashing that like button. And if you're not subscribed, be sure to subscribe to the channel as well. Okay, now let's start with the central paradox. Since early November, Solana's price action has been, well, to put it mildly, brutal. As of this recording, Sol is trading around the $164 mark. That represents a drop of over 5% in the last week and nearly 12% over the last month. This drop has erased all of its year-to-year gains, leaving it down 4% for 2025. Now, to make those numbers feel even worse for Sol bulls, both Bitcoin and Ethereum, despite their own recent weakness, are still sporting year-over-year gains of more than 40%. Technically, the picture looks just as grim. In early November, Sol broke down from a bearish ascending wedge pattern, which pushed the price from $180 down to a low of $144. So, on the surface, it's a sea of red. But here's where the story gets strange. While price was falling, institutional demand was flooding in. The launch of spot Solana ETFs in the United States in late October was a watershed moment, and the demand was immediate. These new ETFs posted 10 consecutive days of positive inflows, attracting a staggering $342 million in fresh capital since their launch. For 6 straight trading days, while Bitcoin and Ethereum ETFs were bleeding capital, Solana ETFs were pulling in hundreds of millions. According to Farside investors, Bitcoin ETFs lost $1.7 billion over that same stretch. The divergence wasn't subtle. So, we have a flood of institutional money coming in, yet the price is tumbling. This is the central mystery that we need to solve. And to do that, we need to look beyond the headlines and dig into the powerful headwinds that have been holding Solana back. But navigating this kind of market, where fundamentals and price seem completely disconnected, requires access to reliable exchanges and the right tools. And if you're looking for the best platforms to trade Solana or any other crypto for that matter, then you have to check out the Coin Bureau deals page. That's where you'll find sign-up bonuses of up to $100,000, trading fee discounts of up to 50%, and deposit cashbacks of up to 75% on the best crypto exchanges around. To get these goodies, all you need to do is hit the link in the description or scan this QR code. Once you get on the deals page, find a deal that suits you and click on one of the sign up now buttons. But remember though, these deals won't be around forever, so take advantage of them while you still can. Okay, so why has Solana been struggling? The first reason is a classic case of a sugar rush wearing off. For much of 2025, Solana's on-chain activity was supercharged by a speculative frenzy around meme coins. This frenzy drove network revenue to incredible heights, but that party is now over. Solana's network revenue has plunged by a jaw-dropping 93% since its January peak. Transaction fees are down 83% in the past month alone. Decentralized exchange volumes fell from a daily peak of nearly $36 billion on January 21st to under $1 billion on some days in recent months. As one Masari analyst put it, this means a deep contraction in meme coin volumes could cause a cascade of revenue declines. While DEXs are still processing a healthy $3 billion daily and new token mints have stabilized, The speculative fever has clearly broken. And that brings us to the second and perhaps most significant headwind. Competition is heating up. For a long time, Solana was the undisputed king of high-throughput, low-cost transactions. But new challengers are emerging, and they are formidable. First, there's Sui. In real-world conditions, Sui is capable of processing around 120,000 transactions per second, which is nearly 2.5 times Solana's capacity. Crucially, Sui processes non-conflicting transactions in parallel, where Solana uses sequential execution, which could lead to bottlenecks. This parallel processing significantly reduces the likelihood of system-wide failures, which, as we know, has been Solana's Achilles heel. And the market has taken notice. Since August, Sui is up 115% versus Solana's measly 6%. Then there's Base, the Layer 2 network from Coinbase. Thanks to its deep concentration with Coinbase, Base is rapidly challenging Solana's dominance as the go-to Memecoin chain. In August, new token launches on Base briefly surpassed Solana, signaling a significant shift in developer and degen interest. While Solana still leads in overall activity and revenue, Base's viral culture and EVM compatibility make it a serious threat. And the third headwind is the elephant in the room: network reliability. Now, to be fair, Solana's performance has improved dramatically. The network has now achieved over 15 months of continuous uptime since its last major outage in February 2024, its longest streak ever. However, the scars of past outages remain. And recent data from Flipside shows that in the past 60 days, Solana's transaction failure rate has ranged from 20% to as high as 45%. This isn't a network outage, but it creates a frustrating user experience, especially during periods of high congestion, like the launch of the Trump Memecoin earlier this year, which clogged the network and slowed transaction finality. Finally, we have the institutional overhang and a classic case of buy the rumor, sell the news. Remember those incredible ETF inflows? Well, that momentum has cooled dramatically. After peaking at over $70 million in a single day on November 3rd, the most recent daily inflow was just $6.78 million. That's a 90% drop. This suggests the initial wave of institutional buyers has been satisfied, and now the market is facing other sources of sell pressure. These include the upcoming $1.6 billion FTX estate distribution at the end of this month, which has traders on edge. There's also the risk of forced selling from corporate treasuries. Forward Industries, for example, saw its stock price drop 20% after revealing its $1.1 billion SOL position, forcing the company to announce a share buyback to stabilize its stock. This raises concerns that if their stock continues to fall, they may be forced to sell some of their SOL holdings. So, with all of those headwinds, you might be thinking it's all doom and gloom. But that is only half of the story. The fundamental tailwinds for Solana are just as powerful, if not more so. And it starts with Solana's most significant upgrade to date. It's called Alpenglow, and Van Eck has described it as, quote, the largest upgrade to Solana's consensus in its history. So, what does it do? In simple terms, it will slash transaction finality times. Right now, it takes about 12 seconds for a transaction on Solana to become considered final. Alpenglow is expected to reduce that to just 100 to 150 milliseconds. That is near instant confirmation. It also aims to boost theoretical throughput to over 90,000 transactions per second. This isn't some far-off dream either. The upgrade has already been approved by 98.9% of stakeholders, and it's set to launch on testnet this December during the Solana Breakpoint conference. This single upgrade could unlock real-time settlement for payments and derivatives, fundamentally changing the game. But that's not all. Alongside Alpenglow is the development of Firedancer. Built by the powerhouse trading firm Jump Crypto, Firedancer is a second, completely independent version of Solana's validator software. Why is this so important? Well, client diversity. Having two different clients means the network can keep running smoothly even if one of them experiences a bug or a critical failure. This directly addresses the single point of failure that caused many of Solana's past outages. And the performance goals are astronomical, with Jump Crypto aiming for a throughput of over 1 million transactions per second. These technical upgrades are happening just as real institutional adoption is accelerating beyond just speculative ETF flows. We're talking about the tokenization of real-world assets, or RWAs. BlackRock, the world's largest asset manager, launched its BITL tokenization fund on Solana. They were joined by giants like Franklin Templeton and Van Eck. Payments behemoth Western Union announced its plans to launch its own US dollar stablecoin on Solana, integrating it into its global payment network that serves over 100 million customers. This isn't just hype. It's the plumbing of global finance being built on top of Solana. This is backed by a quiet but significant increase in corporate treasury allocations. According to CoinGecko, 19 public companies now hold over 15 million SOL, valued at around $3 billion, on their balance sheets. This signals accelerating confidence in Solana as a treasury-grade asset. And finally, while the Memecoin narrative has cooled, the underlying on-chain fundamentals remain incredibly strong. The most important metric here is stablecoins. In the first quarter of 2025, the total supply of stablecoins on Solana more than doubled, rising from 5.2 billion to $11.7 billion. The number of unique daily addresses interacting with stablecoins on Solana exceeded 3 million. This is the real utility. It's not about dog-themed tokens. It's about becoming a global, low-cost settlement layer for digital dollars. This is supported by a robust and growing developer ecosystem. Solana has consistently maintained between 2,500 and 3,000 monthly active developers throughout the year, with developer retention increasing from 31% to over 50%. The builders are here, and they are staying. So, where does this leave us in terms of price? What are the key levels to watch, and what can we expect over the next 2 months? Let's start with the technicals. Right now, Solana is trading in a critical zone. The immediate support level to watch is the range between $154 and $163. This is where buyers have stepped in recently. However, the absolute must-hold level is around $144. A decisive break below this level would be technically very bearish and could open the door for a retest of the $120 support zone. To the upside, meanwhile, the first major hurdle is the resistance area between $170 and $178. If SOL can reclaim this level with significant volume, it would signal a potential shift in momentum, with the next major target being the psychological $200 mark. So, what could trigger a move in either direction over the next 60 days? Well, the roadmap is packed. The single most important event is the Solana Breakpoint Conference in Abu Dhabi from December 11th to the 13th. This is Solana's flagship global event, and it's where we expect major announcements and demonstrations, particularly around the Alpenglow upgrade launching on testnet. Positive news and a flawless demo here could be a massive catalyst. Conversely, any hitches or delays could spook the market. At the same time, though, we need to keep a close eye on the risks. The primary risk is continued sell pressure from token unlocks. While the largest unlocks are behind us, there is a steady stream of linear unlocks scheduled for November, December, and January, which will continue to add supply to the market. We also have to watch the competition. If Ethereum L2s like Base continue to steal market share, or Sui demonstrates superior performance in a high-demand event, it could further dampen sentiment for Solana. And of course, we need to monitor those ETF flows. If they continue to dwindle or even turn negative, it would remove a key pillar of the bullish thesis. So let's bring all of this together. Solana is at a crucial inflection point. The speculative meme-coin-driven chapter of its story is closing. In its place, a more mature, institutionally focused ecosystem is emerging, centered around stablecoins, RWAs, and high-performance DeFi. This transition is causing significant short-term pain. The market is grappling with the after-effects of the meme-coin sugar rush, facing intense new competition and absorbing sell pressure from early investors and the FTX estate. However, the long-term catalysts are arguably the strongest in Solana's history. The Alpenglow and Firedancer upgrades are not just incremental improvements, they are fundamental transformations of the network's core architecture, designed to solve its biggest historical weaknesses. The institutional adoption we're seeing from the likes of BlackRock and Western Union is not speculative, it's foundational. And this leaves us with a cautiously optimistic outlook. We're saying that the headwinds over the next 2 months are very real and should not be underestimated. The path of least resistance could remain sideways to down as the market works through these pressures. But the fundamental work being done on the protocol level, combined with accelerating real-world adoption, is building a powerful base for the next phase of growth. The market is waiting to see if Solana can execute on its ambitious promises. The next few weeks will be the ultimate test. But what do you think? Is Solana's underperformance a massive buying opportunity before Alpenglow changes the game? Or are the competitive threats from Sui and Base too great to ignore? Let us know your take in the comments below. And if you want to understand more about the competitive landscape and how Ethereum's Layer 2s are shaping the market, well, you could check out that video right over here. Thank you so much for watching, and I'll see you again very soon. It's Lewis, signing off.